Hello traders, welcome to this exciting show from Quality FX Trading about how to determine daily bias. I'm sure this is going to be very key, important topic as most of the traders are facing this struggling challenge on how to find the daily bias and they want to know what is the next move. So I promise if you watch this video till the end, you are going to learn how to find what is the next move based on the daily bias which I'm going to teach you. So please don't forget to give us a thumbs up and leave us a comment to let us know about your feedback. Let's start. Okay, here what you can see is a daily chart for S&P market, USA 500, and it's showing you from December 2021, which market reached to this high, and I'm gonna explain from here how to find out the daily bias. First thing you need to know, to find out the daily bias, you should know about liquidity, fair value gap and imbalances, and based on that and also considering the price swing high and swing low. So these are the things which you need to consider when you want to know what is going to be the next move and how the daily candles going to deliver to one direction, either up or down. So let me just zoom in here and show you how price is moving starting from here. So as you can see, this daily candle is going to the downside, and then we are getting another bullish candle here to the upside. So this is what we define as a swing low in the market. You see it's consisting of three candles. One is forming the low. Then you have one candle on the left, which is the low of this candle above this low, and the low on the right side also is above this high. So these three candles are forming a swing low. And when you see such a swing low, it means market wants to or tends to go to the opposite side of the market. And the next day, you see this daily candle bullish is coming to the upside here. So when we reach here, it's gonna be very clear that market tends to go to this high, as this is the nearest liquidity above this high. So when we are here, our daily bias is to the upside, as this liquidity is the nearest liquidity to where we are at that point. So it means the next two candles, when the day is starting, we are looking for buy setup only to reach to this daily bias. So you see after that market is pushing to the upside, and here is consolidating, and then after that you can see another swing high, this time consisting of these three candles, 1, 2 and 3. So the top one forming the high, and the other two on the side, the high of the candle is below the high of this candle. So this is called swing high. And once we have this swing high and this candle, bearish one, is closing below the left of this swing high, it means we are going to the downside. So after this formation, we want the price to go downside, and you can see here there is a fair value gap. So when the market is coming down and it's reaching to this low, then what is going to be our bias? Our bias is the next nearest liquidity on the left side. So this is the one. So we want the price to go and break this low. To reach to that area, we are getting a pullback here to this fair value gap. And once the price comes up, then it is a perfect entry to consider in lower time frame as our bias after forming this swing high and getting this fair value gap. Then our daily bias is to the downside. So when price is giving us such a pullback to this fair value gap, then we want to price to go down and break this liquidity, which is the nearest liquidity pool. Okay, and you can see it's very clear here that price is pushing to the downside and we are reaching to our daily bias. So by considering your daily bias, you know about the next moves, and when the day is starting, you can prepare for that. So in the lower time frame from here, you can focus only to take sell setup until you reach to this liquidity first, and then another liquidity which is the next nearest liquidity. So because these two liquidity are almost equal, so after taking this liquidity, as we don't see any kind of imbalance on this side, so we want the next liquidity also to be taken. And you can see once it was taken, then price here started to push back up inside this fair value gap. So again, first of all, to find out the daily bias, we are looking at the swing high and swing low. So here again we have a swing low. This candle low, below these two candles low. So when the market is pushing to the upside, on these two candles, we are coming back inside this fair value gap. As I'm just putting this blue line, you can see price is coming back up inside this fair value gap, which you can see, and then it's not showing proper reaction. So here we have to wait, because this is a daily consolidation and we want to see a reaction. We want to see another swing high. So if I go to the weekly chart just to show you how we can correlate these together, you can see from the high of this weekly candle, we are pushing the price to the downside and we are breaking this short-term low. So then weekly market structure is getting shifted, and this is very important. So based on this, when you go and you want to find your daily bias, you have to look for sell setup only, and you have to look for actually basically bearish daily bias. Because of that market structure shift in the weekly. So that is a high probability trade and high probability bias which you can find out based on the weekly market structure shift. On the daily, here we are getting a market structure shift. You can see this is the high and here price is pushing down and taking this short-term low. So this is a perfect market structure shift, and you can see daily fair value gap. So once we reach here and we get this swing low, we wait for the price to go back inside this fair value gap, and then it's forming another swing high. So this candle high and these two candles lower high. Then once we get this candle, it's giving us confirmation, and I think by now you know after such a formation swing high and this continuing bearish pressure from this swing high, you know what will be the next liquidity. Of course, you should guess now. It's gonna be this left side, which is the nearest liquidity pool. And because these wicks are here, so this is going to be the first liquidity, and then this liquidity is the second one. So after such a formation, we are looking only focusing on the sell setup to reach to these two liquidity on the low. So after taking these liquidities, then you can see here we got a swing low, and the price is going to inside this fair value gap. So as you can see, the daily bias, we are looking for the nearest liquidity or nearest order block or nearest fair value gap and imbalances. So these are the areas or point of interest we are interested to go and to move the market to that phase. So here price is coming up, but it's not stopping here. So the next candle, once it's closing above this fair value gap, then we know price wants to go above this liquidity high. So this is the high I want to reach. So this is my bias. So the next day, here I'm gonna look for buy setup to break this high. It's going above this clean equal high. So above the liquidity, those fair value gap are also interesting point of interest to see the reaction. So here, after going inside this fair value gap, you can see another reaction as a swing high, and then price is pushing to the downside, and then giving us another fair value gap here, which you have to look for sell setup based on that weekly market structure shift. So after this, our daily bias is going to be next order block here, and below that, which is the liquidity, and then we have again the same story, the fair value gap, and here also another fair value gap. So you can see price is pushing to the downside to finally break these liquidities which are here. So these are the liquidity which is in favor of institutional order flow, which is on the weekly is bearish. So that's why when you find such a daily bias to the downside, then it's a very high probability trade for you to take, and you can take it all down into this next liquidity pool. So here you can see this liquidity is taken, and then price here is giving you another swing low. So when you get such a swing low, you know the price is coming inside this order block, and then this order block is also not retested. So price is going back above this liquidity here, taking this liquidity and also coming to retest this order block, this bullish candle, and after that moving to the downside. So this is the order block which is getting retested here, and look for this low as a next liquidity to be taken. And here you can see price is pushing to the downside, and then after that here we are getting another swing low. So in this kind of market, which is weekly bearish, every time we are getting daily swing low, we are expecting price to manipulate to the upside and give us some kind of retracement for the better entry to sell. So let me just here show you the latest price action on the daily. Here you can see this is September 2022, and you can see price is again going here once we have this swing high formation, which is this candle up. Swing high is consisting 3 candles, as I said. So then price is pushing down, and then we know we are looking for this liquidity low, and when price is going back above inside this fair value gap, once this fair value gap got retested, then our next liquidity is gonna be this low and this low. Here again, price is pushing back, taking this liquidity, and then again another fair value gap. Here you can see how price is going inside this fair value gap to deliver the price into next liquidity, which is here down. And then after this we can see a reaction, and price is giving us another swing low, and I call this price action as a manipulation, because overall we are bearish. So any kind of daily bullish price action like this for me is kind of manipulation, which is the best chance for the entry. So here you can see this is what happened yesterday on September 13. Before the CPI data, you can see this order block and how price perfectly went in 50% of this order block, retested, and then price pushed to the downside, and now we are waiting for the price on this daily to give us some kind of correction. And I think by now, which we are getting into the end of this session, you know what is going to be the next move. The next move is gonna be to take this nearest liquidity. Yes, you are right. You are right, and that means you learn about Dailybias and how to find the next move in the market. Here we are going to take this liquidity, and after that, of course, we are going to get all this lower liquidity based on each day price action, so you know how to find daily buyers. I hope this has been informative for you, and I want you to like and comment, so we will bring more exciting and interesting stuff for you to learn. And I would like to thank you for watching.